Question, my good students, what I'm doing. Yeah, this is the question here. It's question number 3, yeah? It's question number 3. It is question number 3, April 2025, question number 3. April 2025, question number 3. Always you shall start with the requirement, always. So this examiner part A for 6 marks, they want us to give them the value of goodwill arising on acquiring 𝐻IP Limited. Number 2, determine the value of interest in 𝐬𝐿𝐼 Limited as at this date. And then number 3, they want us to prepare the consolidated statement of financial position for Pool Group as at 31st December 2024. So I'm repeating again that this is an FR question. It's an FR question, but applicable to AFR and the BDA. So if I get this kind of a question in an exam, then ladies and gentlemen, what shall I be able to do? This is an easy question. I will be able to get all the marks even without knowing what I'm doing. So what I will do pretty fast, my good students, is this. What I will do, ladies and gentlemen, pretty fast is this. This is what I shall do. First of all, I must understand the group structure. That is the first thing. I must understand the group structure. How does this group look like? So we are told up here, on 1st January 2024, Pool Limited acquired an 80% controlling interest in 𝐻IP Limited when the retained earnings of 𝐻IP Limited amounted to 3.2 million. Not a problem. Remember the figures here in shillings thousands. So even when you are reading, we shall be cutting 3 zeros. So this is 3,200. So ladies and gentlemen, we can see a company called Pool that acquired 80% of what here? So we have here Pool, which has acquired 80% of 𝐻IP. 80% of 𝐻IP. So automatically 𝐻IP becomes who? 𝐻IP becomes, in this case here, 80% is so high. 80% means what here? 80%, ladies and gentlemen, in this case here means controlling. We are able to control. All right. So then, ladies and gentlemen, if that is the case, we need to know the date of acquisition and the date of the financial statements. Is there somebody who can give me these 2 dates, my good students? The date of acquisition and the date of financial statements. Remember, 80% is more than 50%. Of course, in some cases, we shall not be defining control using those percentages. But in light of no additional information given, a bigger percentage shows that you are the one who is the controller. So the date of acquisition that we have, if I project this question, the date of acquisition we have, ladies and gentlemen, is this one here. So we are told here, on 1st January 2024, so we have here 1st January 2024. That is when we acquired this subsidiary. And the financial statements given, we are told the following are draft statements of financial position for the 3 companies as at 31st December 2024. So you can see the date of the financial statements, 31st December 2024. So we have here 31st December 2024. How many months do we have in between? How many months do we have in between, my good students? How many months do we have in between, my good students? It must be a whole year, isn't it? It is a whole year because you can see it was 1st January when we acquired, and the financial statements end of the year. So these are 12 months. So basically, the subsidiary was ours for the whole year, 12 months. Yeah, 1 year. Great. Now, ladies and gentlemen, after that, I shall continue to see whether this company has got other interests. Do we have other interests? So yes, we are told the purchase consideration that will come later, the retained earnings that will come later. So I can see things have been given here. No, this was for this. Yeah, Pool Limited as a cost, believe alone that. Look at this other interest. Pool Limited also acquired 50% of the equity interest in 𝐬𝐿𝐼 Limited and obtained joint control over 𝐬𝐿𝐼 Limited on 1st January 2024. So, ladies and gentlemen, we have Pool again making some other advance. So Pool went ahead to acquire some other interest here in a farm known as 𝐻𝐿T. So they acquired exactly 50%. So if they acquired exactly 50% of 𝐻𝐿T, this interest in 𝐻𝐿T, what name shall we give it? Is there somebody who, is it an associate? Is it, in this case here, a subsidiary? What is it? If we acquire 50% exactly, we normally call this Mr. 50%. Mr. 50%, what name do we give it? What name do we give this? Mr. 50%. It is called a joint, you can call it a joint investment or a joint venture. Yeah, call it a JV. Mr. 50%, to simplify your language, call it JV. JV, joint venture, we shall account for joint ventures using IAS 28. Remember, IAS 28 says that you account for associates and joint ventures using the same approach. It's called equity method. It's called equity method. So it's IAS 28, associates and joint ventures or joint interests, account for them using, in this case here, what we call equity method. Equity method. Equity method. Equity method. So for 𝐻𝐿T, do we know the date of acquisition? Do we know the date of acquisition? Do we know the date of acquisition? The date of acquisition, my friends, for 𝐻𝐿T, we are told here for 𝐻𝐿T, date of acquisition here, yeah, 1st January 2024. Great question. We acquired it on 1st January 2024. Hapa hakuna madiambo. Date of financial statements, it is the same always for all companies. Date of financial statements is 31st, 12th, 24. So again, number of months, how many are they? They are 12. Number of months, they are 12. Number of months, they are 12. So up to here, ladies and gentlemen, are we somehow together? We cannot, of course, be like 100% together, all of us, because some of you may have come in a bit later, a bit late. But somehow, are you able to follow what Mwalimu is doing? Somehow, are we able to follow what Mwalimu is doing? Yes. Now, once I've finished doing this group structure, the next thing will be for me to start consolidating. Don't do any other workings in between. You start consolidating. However, this question was quite special. The examiner knew that so many people will not be able to learn how to calculate goodwill, how to get investments in joint ventures, etc. So the examiner tricked us, and in this case, he wanted us to do those workings. Yeah. I adjust the board. Okay, great. No worries. I'll be able to do that. So this examiner, part 1 of this, he wants me to calculate the value of goodwill. You see, he wants me to start with these workings. So I cannot ignore them. I have to do these workings. Otherwise, if A and B wasn't there, I would have prepared consolidated statement of financial position for pool group. As at this, I would have started consolidating directly. But now the examiner wants me to do some workings before I start consolidating. Now, ladies and gentlemen, I would want to start working on this particular what here. Workings here, I have to reduce the size of my board. Yeah. I hope somehow this is much better. Yeah, great. I hope it's much better. Are we okay now with the clarity of the board? With the clarity of the board, is it much better? Is it much better? Is it much better? It can't be perfect. There is no perfect system. Thank you so much. Thank you so much. So then I'll be able to now rub this. So then now that this examiner has tricked us and he wants us in this case here to start looking at some workings, could you kindly tell me that benchmark working, that most important working that I must start with? If the examiner wants me to do these workings, which working should I be able to start with, my friends? Which working should I be able to start with? Which working should I be able to start with? Thank you so much. There is no way I will be able to account for a subsidiary that I'm buying without understanding its net assets. So I must, in this case, understand the net assets, first of all, before we talk about goodwill or any other working. So the assets here, so come here and give me the net assets of the subsidiary at acquisition and at reporting. At acquisition, what we call DOA, and at date of financial statements. Yeah, like that. Yeah, great. Great. So come here and they give me the net assets of the subsidiary, not the joint venture, not the associate, but net assets of the subsidiary at acquisition and at what year? At reporting. At acquisition and at reporting. At acquisition and at reporting. Now listen and listen to me very well, my good students. So my good students, what I want us to do, you see, whenever this examiner talk of net assets, what should always come to my mind? What should always come to my mind? Net assets are equity components. Net assets equals equity. And whenever they talk of equity, you are very bright students. Equity, we are looking at share capital. So please don't forget that these are equity components. Equity components. Yeah, share capital. Share capital. We have share premium. Those things, isn't it? So like in this question, is there somebody who is able to see the share capital? Anybody who is able to see the share capital? Oh yeah. Anybody who is able to see the share capital? Oh yeah. Anybody who is able to see the share capital in this question? So you go to, please listen. This is a straightforward question. My students should be able to pass all of them because consolidation must always be there. So remember, our company, our subsidiary is SHAPE. So everything about net assets is SHAPE. You will not bring net assets of pool, neither the net assets of Jolty. It's SHAPE. SHAPE is our subsidiary. So that you come here to ordinary share capital of the subsidiary, which is 20,000. So share capital here for SHAPE is 20,000. So then what I will do for SHAPE, and I always tell you, share capital and the share premium, you shall always treat them like the accountant. Of course, all accountants do not know how to dance. They are ever constant. Take them to any dancing floor, you'll never see them moving. No moves at all. So when you see the share capital of the subsidiary, they are being 20,000, it shall be the same. It shall be constant. 20,000, 20,000. No changes. No changes. The same case with share premium, free marks. Free marks, no changes. No changes, no changes. So the share premium given my good students, the share premium given here my good students, I can see the share premium of what? Of the subsidiary. 2,000? Don't read like 2,1,500, no. It's only SHAPE, the subsidiary. So share premium will be 2,000 and 2,000. Thank you very much. 2,000, 2,000. The one that you have to be very, very careful about are the retained what here? The retained earnings. The retained earnings, you must be very, very careful with them because retained earnings, they always fluctuate. Always. They can never be constant. Retained earnings will always fluctuate. So for the first column, we want retained earnings at acquisition. When we were acquiring the retained earnings, ladies and gentlemen, how much, when we were acquiring this subsidiary, not the joint venture or associate, we are told on 1st January 2024, Pool Limited acquired an 80% controlling interest in SHAPE Limited when the retained earnings of SHAPE Limited amounted to 3,200. So when the retained earnings amounted to 3,200, when the retained earnings amounted, that is at acquisition. How about at the financial statements date? At the financial statements date, retained earnings, ladies and gentlemen, will be, you are able to see here pretty fast, SHAPE Limited, retained earnings of SHAPE Limited at reporting, they were 6,100. 6,100. They were 6,100. They were 6,100. Thank you very much. I can see so many new messages. Yeah, please. Thank you very much. They are participating. I love that. They're participating. Actually, today I should be able to give somebody a present. I think it's a long time since I gave anybody a present. Actually, the other day, a student was calling me that, Mwalimu, is it that you have become broke or what? No, today I'll be able to give us a student a reward. Yes. Great. Now then we continue. Now, ladies and gentlemen, we know that the other form of retained earnings will always happen whenever we have fair value adjustments. Whenever there is a revaluation gain will always, in this case here, have an impact on our equity. So we look for fair value adjustments. So fair value adjustment, please write in full. Fair value adjustment means what here? Revaluation, yes. Revaluation, yes. So fair value adjustment. So fair value adjustment, what do we have here? In this question, they have told us here, they'll always be here. And these are things you can really pick up very fast once you become very good with these questions. We are told at the date of acquisition, the fair value of 𝐲𝐵 Limited, 𝐲𝐵 is our subsidiary, and we are doing net assets of the subsidiary. So the fair value of 𝐲𝐵 Limited's net assets approximated their carrying amounts with the exception of some plant whose fair value was 1,000, I'm cutting the 3 zeros, above its carrying amount. So if it was 1,000 above, that's a fair value adjustment, which is an uplift, or a gain, Yeah, remember this is normally the same. 1,000, like that. So whenever there is a fair value adjustment, then there must be fair value adjustment, depreciation of the same. So this depreciation, my good students, what I just need to know is the useful life. So the useful life, what do we have here? We are told at this date, the plant had a remaining economic useful life of 5 years. 5 years. So please then, this fair value adjustment, depreciate it. So it is 1,000. You divide this by what year? By 5. And then remember, we are very lucky because we had stayed with this subsidiary in the financial year. Is there somebody who remembers how many months had we stayed with this subsidiary in the financial year? How many months had we stayed with this subsidiary? Yeah, 12/12. So if it is 12/12, I don't have to do proration. Although for revision, I can just say 12/12 like that. Yeah, so in this case here, 1,000 divided by 5 times 12/12, this will be 200. So where do I put this 200? Can I put depreciation here when this value is brand new? No, at the end. So this is dash. Depreciation normally comes with time. Here value was brand new. So put 200 here, and because this is lost in value, we put brackets. So this is fair value adjustment uplift. Now, my good students, thank you so much in this case here for really guiding me. Can you kindly tell me any other component you would have brought here if this was an exam question? Can you kindly tell me any other component that you would have brought here? Or is that everything? Yeah, Millie, now you get my present. Millie will get my present. Millie Kaku, you will get my present. That in this case here will bring what we call unrealized profits on stock. Unrealized profits on stock. But remember, we only bring unrealized profits on stock on one condition, not two, but one. Are you able to remember that condition? That in the net assets of the subsidiary, you can only bring UPS of the subsidiary if it is what here, somebody? Upstream. If it is upstream, when the subsidiary sells, when sub sells, when the subsidiary is selling. If it is downstream, that profit was earned by the parent, so it cannot be brought here. Remember, upstream, it is when the subsidiary sells to the parent. And how do we get this, my good students? To get this, remember, we take profit margin. Profit margin times remaining intra-sales. Please, you can write this in full at first. It will be important for you to write this in full. That anytime you want to get this unrealized profits on stock, you take profit margin times remaining intra-sales. So in this question, have they given me this? Very easy. Oh yes, they have given me. They have told me here. Yeah, Pool Limited goodwill, no, that one, no. During the year ended 31st December 2024, who sold 𝐲𝐵 Limited sold goods to Pool. So let me ask you a question. When 𝐲𝐵 who is our subsidiary, is selling to pool, is this upstream or downstream? Is this upstream or downstream? Yeah, you can see from our drawings. From our drawings, we had pool here, and then we had shape here. So you can see downstream moves, but this time around it is shape selling to pool. So it is upstream. Great, then these must come to net assets. So come, ladies and gentlemen, here. So we are told here, during the year, ended 31st December 2024, Shape Limited sold goods to Pool Limited for 4,500 at a markup of 25%. And I've taught you this, I don't have to belabor. Whenever you are given markup, whenever they give you markup as A over B, then to get margin, kumbuka tuna joke hivyo, tunasema kwamba margin, huwa tuna joke, ati iko na makalio makubwa. Margin iko na makalio makubwa. So margin lazima ukuje uongeze, usichukue hapa, hii profit uongeze hapa. So then wakiniambia kwamba markup is 25%, which is the same as 25 over 100. 25 over 100. Then my good students, my margin, if this is markup, my margin will be 25 over 100 plus 25, which will be 25 over 125. So first of all, let me know whether we are together as to what I've done in terms of getting the margin. Are we together there, ladies and gentlemen? I can see 39 new messages. We shall overcome. Yeah, thank you so much. Remember, so far I owe 𝐸𝐿𝐿 1,000 bob. I'll be also be giving. So 𝐸𝐿𝐿 is a FR student. I'll be looking for AFR student, another 1,000. And I'll be looking for BDS student because I must give 3 students. I will not be gender sensitive. Whoever who wins gets. So 𝐸𝐿𝐿 has gotten for the group, from the group of financial reporting students. So the profit margin is 25 over 125 times remaining intra-sales. So remaining intra-sales, what do we have here for the remaining intra-sales over here? Remaining intra-sales, we can see, ladies and gentlemen, that Shape Limited sold goods worth 4,500. So the goods worth here is 4,500 times at a markup of 25. 1/3 of these goods were still held by pool on the reporting date. 1/3 were held by pool. So in this case here, remember, our RIS, our remaining intra-sales is here, 1/3 of this, 1/3 of that. So could you kindly give me an answer here? Remember, this stands for remaining intra-sales, remaining intra-sales. Remaining intra-sales. What answer do we have, ladies and gentlemen? What answer do we have, ladies and gentlemen? 300 bob. And remember, this UPS cannot come here, eh? Yeah, 300 here. And the UPS is fake profit in stocks, so we deduct. Fake profit in stocks, we deduct. And that is it. So go ahead and give us net assets. Go ahead and give us net assets at acquisition and net assets at reporting. Net assets at acquisition and net assets at reporting. Please add them up. Please add them up. Give me these figures. So like at acquisition, what is the value of our net assets? At acquisition, what is the value of our net assets? 26,200. 26,200. And then at reporting, please add these ones. And of course, you'll subtract these two. Yeah, of course, you'll subtract these two. You subtract them like that. 28,600. 28,600. Now, ladies and gentlemen, once you get these two figures, what will be your next thing to do? What will be your next thing to do? Once you get those two figures, what will be your next thing to do? You give us the PAP. You give us the post-acquisition profit. You give us the post-acquisition profit. Post-acquisition profit, what I normally call PAP. So PAP, you take this minus this. 28,600 minus 26,200. So is there somebody who is able to give me this figure? Post-acquisition, after acquisition, it is 2,400. Don't even, in this case, here, subdivide it now. Just leave it like that. Just leave it like that. Don't subdivide it now. Just leave it like that. That will really be great. That will be great. So I will share these answers with you. I have these answers from our great examination body. Because of time, I would want to share this answer with you for your own reference. For your own reference, ladies and gentlemen. So you can see, for example, they have done their net assets. I can tell you passing these CIFA exams is normally the easiest thing. You can see working number one, net assets in shape limited, the subsidiary, like what you have done. Of course, then they are introducing this column, although this column is not necessary, yeah? Totally, it's unnecessary. Yeah, so this and this, very important. And this approach is the new approach. It is the ACC approach as well. It's also the CIFA's approach. This approach is the easiest. Once you have finished this, then now you can go to the second question. You can go to the second question. So second question, ladies and gentlemen, we want, not second question, but still we are doing the goodwill. We are still doing the first question, the goodwill. So now we can go ahead and give them goodwill. Just a minute, I show the question here. So we go ahead and give our examiner goodwill. We go ahead and give our examiner goodwill. Yeah, so you can see here they want us to give them goodwill. We've just done the net assets valuation. So now let's give them goodwill. So how do we get goodwill? Is the easiest to calculate. Anybody, if you're not able to get goodwill, then you have a problem. Because what I need already, I've done the first section of goodwill, this one. So to get goodwill, I'll be able to get goodwill pretty fast. Oh, yay! How do I get goodwill? How do I get goodwill? So to get goodwill, you'll take the consideration paid by parent, like that. Consideration paid by non-controlling interests, like that. Then you will be able to get total consideration. Total consideration. So total consideration, you add the two, and then you come and subtract net assets at acquisition. Net assets at acquisition, you subtract like that. Then you'll be able to get what we call goodwill. Goodwill at acquisition. Goodwill at acquisition. Then you come and less impairment loss. You less impairment loss, oh yay. And then you'll be able to get what we call goodwill at reporting. So let me know once you ninjas are able to write this pro forma. Let me know once you're able to finish writing this format. This format is very, very important for goodwill computation. For goodwill computation. Yeah, remember goodwill, we are looking at the amount that you pay over and above the normal assets value. So that this lady is worth like, say, 2 million in terms of dowry. Like unasema huyu akona goodwill. So naongeza unalipa 5 million. That premium is what we call goodwill. Na kama akona badwill, what do? Hata utalipa dowry. No, we are joking. I just wanted you to know that premium, goodwill is the premium which you pay over and above the value of the net assets of the subsidiary. Thank you so much. Yeah, so they are finished, right? Mugendi, I haven't seen your we shall overcome. Let me just go ahead and do this. You'll be able to understand what I'm doing, Mugendi, sorry. So then in this particular case, you can see what the parents paid. So the parents paid, we are told here the acquisition consideration consisted of an immediate cash of 12,000 and a deferred consideration of 12,100. Oh yeah, very easy, very good examiner. So nitakuja hapa niseme sasa consideration paid by the parentee. So consideration paid by the parent. So we have here consideration paid by parentee. And then I could confuse, lakini najua kuna cash payment ya 12,000. Alafu kuna deferred consideration. Deferred consideration nimesahau ilikuwa ngapi? Deferred consideration. Deferred consideration ilikuwa ngapi? Deferred, the one that will be paid in future, a further cash payment of 12,100. I'm cutting the 3 zeros, eh? So 12,100 This will be paid in the future. And because it will be paid in the future, what do we do with it? Because it shall be paid in the future, what do we do with it? We must discount it, isn't it? We must discount it. So discounting, it's either you multiply with PVIF, ama ukuja hapo useme divide by 1 plus R raised to positive n. When you're dividing, use positive n. So R is the required return. R is the cost of capital. Oh yeah. What is the cost of capital in this question? What is the cost of capital in this question? So the cost of capital they have given us here is 10%. And by the way, you can see we did the acquisition on 1st January 2024, but this amount will be paid on 1st January 2026. So what is our N in this case? N number of years. We acquired on 1st January 2024. Yeah, but we have made a promise to pay in 26. I think those are 2 years, isn't it? These are 2 years. Kwa hivyo nitakuja hapa niandike 12,100 divided 1 plus 0.1. The cost of capital is 10% raised to power 2. Ambao ni 12,100 divided by 1.1 raised to power 2. Nipatie ni answer tuone hapa mbio mbio. Nipatie ni answer tuone mbio mbio. Yeah, so that gives me 10,000. 10,000. Aya, kutoka hapo kuja hapo nasema consideration paid by the other. You remember we took 80%. So there is 20% owned by NCI. So consideration paid by non-controlling, this will be given in the question. Consideration paid by NCI. So consideration paid by NCI, we are told in this question, consideration paid by NCI, you can see here, Pool Limited measures goodwill and NCI using fair value method. The fair value of NCI of ship was 5,700. 5,700. Aya. Kuja hapa munipatie total consideration. So are you able to give me the total consideration, my good students? Is there anybody who can give me the total consideration, my good students? Total consideration, my good students? 27,700. 27,700. Then we less net assets. We less net assets at acquisition. Less. Do you remember those net assets at acquisition? Woye, acha niache kusema woye. Kuna siku napatana mwanafunzi kwa ananiambia ati mwalimu ule mwalimu wa woye. Ile ishi hapa kwa darasa. Net asset, no. Sio 26,200, isn't it? Net assets at ile ilikuwa kwa date of acquisition 26,200. All of us, are we able to remember this? All of us, we are able, great. We are able to remember these net assets at acquisition. Yes, oh yeah, great. Thank you very much. So then we have in this case here, goodwill at acquisition. So goodwill at acquisition. Goodwill at acquisition, inakuja ngapi this minus this? 1,500. Of course, this goodwill, inachapa, si hata ukilipiwa goodwill, binadamu unachapa with time pia. Kuna impairment loss. Wezi kaa ati brand new throughout. Tunachapa, tunazeeka. Hata gari zinazeeka, hata assets zinazeeka. So kuna impairment loss. So impairment loss, what have they told us? Impairment review performed on 31st December 2024 revealed that goodwill from the acquisition of Shape Limited had impaired to the extent of 10%. Alafu ni whole year, remember. We stayed with this subsidiary for a whole year. So impairment loss, 10% of 15 is 150. So then we have here goodwill at reporting. Goodwill at reporting. Goodwill at reporting in ngapi? Goodwill at reporting in ngapi? If it doesn't have a loss, good question, you simply say 0. Yeah, 1350. 1350, thank you very much. So once you finish writing up to here, can you kindly put your thumbs up like this live? And if I may ask, the BDA students, are you able to cope up? The BDA students, are you able to cope up with our speed? Are you able to get something? Great. Thank you so much. Thank you so much. Great. We are together. I know you guys had really missed me. BDA people must have really missed this voice. Yeah. Golden voice. No, I'm joking. We shall overcome. Sasa kutoka hapo, tushamalizi hesabu. Tuangalie part B. Part B, they want me to determine the value of interest in Jolty Limited as at 31st December 2024. So Jolty Limited is a joint venture. So what I need to do is to come and give them 𝐬𝐿𝐻 Limited. So investment in 𝐬𝐿𝐻, investment in 𝐬𝐿𝐻, it's a JV. So namwandikia hapo IAS 28. Kama unaweza kumbuka, kama ukumbuki ina shida, IAS 28 equity method to scare, you scare him. You scare this guy, he can even run out of his skin. You scare him. If you remember, investment in joint ventures is the same as a investment in associates. What do? You take the original cost. Unaweka hapo, una add share of PAP, and then remember their share of PAP is very easy. You look at growth in retained earnings, growth, growth in retained earnings, right? Alafu na less impairment loss. So nakuja na less namna hii. So napata hapa investment of 𝐬𝐿𝐻 at reporting. Investment of 𝐬𝐿𝐻 at reporting. Hebu nifanyie favor, kama umeshamaliza kuandika hii format, niandikie namna, niwekee kidole bamba, sema yes. Ama sema yes. Sema yes. Sema yes kwa ushamaliza namna hiyo kuandika hiyo format, yeah. Sema yes. Thank you so much. So sasa tuangalie yetu ya 𝐬𝐿𝐻. Yetu ya 𝐬𝐿𝐻 iko wapi? Yetu ya 𝐬𝐿𝐻. So 𝐬𝐿𝐻, the original investment is given here. For 𝐬𝐿𝐻, the original investment is given here. Pool Limited also acquired 50% of the equity interest in 𝐬𝐿𝐻 Limited and obtained joint control over 𝐬𝐿𝐻 Limited on 1st January 2024. The purchase consideration comprised an immediate cash payment of 10,000, because I'm cutting 3 zeros because of this. So this is the original investment. Abracadabra, mimi nachukua shortcut. So original investment, original cost, nachukua shortcut 10,000. Very good. Then now we track the retained earnings of the JV. The retained earnings of the joint venture ama associate, unaangalia very easily. Unaangalia, when we acquired this joint venture, it had some retained earnings of 2,500. Yeah. And at reporting, the joint venture called 𝐬𝐿𝐻, at reporting 𝐬𝐿𝐻, ilikuwa na retained earnings ya ngapi? Mbesha shigana. Ilikuwa na 3,800. So from 3,800 to 20 what year? To 2,500. No, from 2,500 to 3,800. So that growth. So, unakuja hapa mimi na modify yangu. So unasema 3,800 minus 2,500, and ours is only 50%. Ours is only 50%. Remember, joint venture, we only own 50% of the JV. We only own 50% of the JV. Inakuja ngapi? 650. Wananiambia kwamba ni 650. Thank you very much. Then, ladies and gentlemen, we come to the next one. So the next one, what are they telling us here in terms of impairment? We are told impairment review performed on 31st December 2024 revealed that goodwill arising from the acquisition of SHAPE, which is our subsidiary, had been impaired to the extent of 10%. The interest in 𝐬𝐿𝐻 Limited was unimpaired. So impairment loss is 0. Impairment loss here is 0. So ukifanya maneno unapata investment of 𝐬𝐿𝐻 at reporting ni ngapi? 10,600 and what year? 50, like that. So up to there, I don't know whether we are together. Oh yeah, I'm alone, but I will overcome. Up to there, are we really together? Are they able to follow? So if you look at our workings here, yeah, you'll be able to see, for example, interest in 𝐬𝐿𝐻 Limited, you can see 10,650, goodwill 1,350. We are doing very, very well. Now from there, ladies and gentlemen, what we shall do, now we go to the consolidations. So consolidations, I'll be able to do consolidation very fast because I have all the workings now. I will be able to do the consolidations very fast. So unaandika jina ya group ni jina ya parent. So unasema hapa pool group, consolidated statement of financial position as at, which date is this? My good students now? Which date is this? Which date is this really? Yeah, the date in the financial statements is 31st December 2024, isn't it? As at 31st December 2024. As at 31st December 2024. Let me know whether you guys have been able to write this. Have you been able to write this heading? Have you been able to write this heading pretty fast? And then you'll do me a favor. I would want, thank you so much. Before I ask for that favor, so then I'll wrap this because my board is not that big. So then how do we do this statement of financial position? We start with our assets. Our assets, we shall look at non-current assets. So non-current assets, what do we have for non-current assets? Go to your past paper. So the non-current assets, my good students, are very easy to pick. The non-current assets are very easy to pick. Here, we are consolidating, we are adding. So you take the one of the parent pool, 36,400. So we have here PPE. So 36,200, 400 I mean, plus 18,500. Let me ask you a question. Will I consolidate the figure for 𝐬𝐿T Limited? Will I take plus 14,600? Will I take plus 14,600? Oh no. We only consolidate the parent and the subsidiaries as per IFRS 10. Consolidated financial statements, we only, ladies and gentlemen, take the figure of what year? Figures of the parent plus subsidiaries. If there are associates and joint ventures, katika consolidation, potelea mbali. Hizo we don't consolidate them. Now, after you've done this, now go to your net assets account. Your net assets account, if you remember, there is a plant, fair value uplift. How much was it? In that net assets, oh yeah. In that net assets, is there somebody who is able to remember 1,000? Akiam alone, is there somebody from the net assets, 1,000? Yeah, of course, this will increase my assets. And then, of course, you'll be able to come here and subtract depreciation of this. Depreciation is going to kuja ngapi? 200. So are you able to give me this figure? Oh yeah, the consolidated. You know, consolidation is just a big term over nothing. Yeah, it basically means add and make adjustments. So wananiambia mwalimu ni 55,880. Hiyo figure siamini sana kwa nini? Hiyo figure siamini sana kwa 80 imetoka wapi hapa? Ama umesubtract 20. Hebu angalia vizuri tena. 55 what year? 700. Tena mwingine amesema 600. Kumbe nafai kuwe 55,700, isn't it? Thank you so much. So other non-current assets, what do we have? Oh yeah, non-current future assets, we have goodwill. And fortunately, we have calculated goodwill, isn't it? We have calculated goodwill. Are you able to remember that figure of 1,350? 1,350. Thank you so much. Any other non-current asset? Cost of investment? No. No. Any other non-current asset, our investments in future? Interest in joint venture, or you simply call it what here? Investment in joint venture. Yeah. Same as the way we do it with investments in associates. Yeah. So investment in joint venture, already we have done a working down there. Was it 10,650? Was it 10,650? Oh yeah. Aki niko peke yangu. 10,650. Aya. Kutoka hapo oye mbio unakimbia kwa current assets. Hata kama understand, una consolidate tu, utapata marks mingi sana za free, Hata kama understand, just consolidate, you will get so many marks for free. So current assets, you come here under current assets, my good students. What do we have here under current assets? So under current assets, we have inventory. So unaandika hapo kwa furaha ukismile. Tena exam mistaki wanafunzi wanaharibu sura kwa exam. Na una smile. Tota kama upati chochote, usitoroke kabla exam time ishe. Na usikasirike. Unafurahi tu. Sasa si umesoma. Yeah. So when I'm consolidating inventory, what am I required to remember pretty fast? Whenever I'm consolidating inventory, I've taken the inventory of the parent plus the inventory of the subsidiary. But in the net assets, there is something happening there. There are some inventories that we have in our net assets, which in this case will lead to what we call fake profits. Do you remember the concept of fake profits? Fake profits, the UPS, isn't it? UPS, not intercompany sale, UPS. And we had calculated this UPS. The UPS in this case here gave us how much? The UPS gave us how much? We had already calculated this. UPS, it was 300, isn't it? 300. So please give me this figure pretty fast. You'll be able to get that figure on the net assets. You'll be able to get that figure on the net assets. So are you able to give me 34,100? I'm being given a figure of 34,100. Oh yeah, from there we go to receivables and consolidate. We go to receivables and consolidate. Receivables and then we consolidate. So receivables and then we are consolidating. So receivables, what do we have here for receivables? I can see 18,500 plus 11,400. Please, we cannot add JOLT. We can't add joint venture. So plus 18,500, 18,500 the parent plus the one of the subsidiary, which is 11,400. 11,400. Hapa ndio nakumbuka yule bibi wa mwalimu, bibi ya mwalimu, mwalimu ameombwa na bibi yake 100,000. Nimempatia asubuhi. Yeah, nikishampatia asubuhi, for sure, do I expect to ever get that money back? Not unless I'm a crazy husband. You know, they are also, some of us are crazy. Utamwambia nirudishie pesa yangu. Bwana ukipatiana pesa, that's a fake receivable. It's a fake receivable. You will never get that money back. Trust you me. If you want peace in that house, you will never get back that money. Please write off that figure. So the same case here with the parent and subsidiary. Once a parent has given money to a subsidiary, or a subsidiary has given money to a parent, there is a fake subsidiary, we need to come and deduct. We need to come and deduct. We need to come and deduct. Yeah, we need to come and deduct. So do we have these fake subsidiaries, ladies and gentlemen, in this question? Oh, yes, we do. Remember here, hii kitu ili confuse wanafunzi wengi. Tukimark hii exam, ili confuse wanafunzi wengi sana. Ukiona hapa, tunaambiwa during the year ended 31st December 2024, Shape Limited sold goods to Pool Limited for 4,500 at a markup of 25%. 1/3 of these goods were still held by Pool Limited as at that date, and the balance payable was still outstanding. So in this case here, what do you think? We can see there is an inter-owing between the two companies because of the internal sales. So then what do you think is the figure of a fake receivable? A fake receivable. I saw so many students taking 1,500 because they took 4,500 times 1/3. No, ladies and gentlemen, even if this other company had been able to sell some goods outside there, there is nowhere we are told that they were able to make some payment between themselves. So the internal sales, which led to, ladies and gentlemen, a fake receivable and a fake payable is the entire 4,500. So minus 4,500. So we have here minus 4,500. There is nowhere we are told that they ever got to pay each other. Nowhere. So how much do we have, my good students, there? Yeah, you can see so many of you would have really been wrong here. It doesn't matter whether this other company sold. No. So long as they haven't told us that this interbalance account, there was some settlement. No settlement was done. No settlement was done. If you allow me, I'll be able to share something with you here. If you allow me, I'll be able to share something with you here. Just for your confirmations, ladies and gentlemen. I always like my students here being comfortable. You shall be comfortable always when you are being taught here by RCM. You shall always be comfortable. You shall always feel appreciated. So you can see the receivables here. Even these guys were just taking out the whole 4,500. All right. Great. So then please go ahead and give me this figure, ladies and gentlemen. 25,400, isn't it? 25,400. From there, we have cash and cash equivalents. So we have cash and cash equivalents. So cash and cash equivalents. So cash and cash equivalents. What do we have here for cash and cash equivalents? So for cash and cash equivalents, this is normally a very easy thing. So for cash and cash equivalents, you will simply take the one of the parent plus the one of the subsidiary. Very easy. Easy peasy. Easy peasy, oh yeah. So we have here cash and cash equivalents of 12,700 plus 8,100. 12,700 plus 8,100. Fortunately, they're not giving us any cash in transit in this question. No cash in transit. So are you able to give me this answer, my good students? This cash and cash equivalents? 2,800. And that is it. So go ahead and give us our total assets, my good students. Go ahead and give us our total assets. So is there somebody who is able to get total assets? Total assets. both current and non-current. Both current and non-current, if somebody can just add this, both current and non-current, and that is how we mark, by the way, one mark, like in this question here. So in this case here, I'm being given a figure of 148,000. Please mark this figure, very, very important figure. I would have continued down here, but because my space is too tiny, please allow me to rub this. Yeah, for your case, you'll be able to continue. Is that okay? And then now we have to discuss. I don't know whether you can excuse yourself at your workplaces for only an extra 10 minutes I finish this question. Is it something we can tie our heads over? And I mean, of course, I'm asking you to steal your employer's time. I just wanted to put it in a better language. I just get to finish this question. Yeah, thank you so much. Thank you so much. We proceed. So I'll end at 2:10. Yeah, 10 minutes exactly. Yeah, at 2:10 exactly, or even less. So this figure, I love it. This figure, I love it. 148,000, I'll use it because it'll help me. So come here and give me the financed by. So we have here equity and liabilities. Equity and liabilities. So we start with equity. Equity, we have our share capital. What do you know about share capital, my good students? What do you know about share capital? Parent only. Thank you so much, Mary. Parent only. So parent only. Free mark, which can make you see places that you have never seen before. Parent only. Baba peke yake tu. Parent only. So 50,000, isn't it? Then there is share premium, 5,000. So share capital, ladies and gentlemen, what do we have here? 50,000. And then we have here share premium. Share premium. So this share premium, how much do we have? 5,000. What else do we have here? We have retained earnings. Retained earnings. And then we have NCI. Retained earnings and NCI. Retained earnings and NCI. So retained earnings, I will take this as a balancing figure. Balancing figure, yeah. But NCI, I'll be able to do NCI working separate. I must do this NCI separate. So tell us here NCI at acquisition. Ni figure gani ile ambayo uko nayo kwa balance sheet? Not kwa balance sheet, but kwa goodwill. For goodwill, are you able to remember the NCI at acquisition? How much do we have there? NCI at acquisition, oh yeah. NCI at acquisition, oh yeah, ilikuwa ngapi? Ilikuwa 5,700. Nambi ilikuwa ni 5,700. Come and give these people their share of PAP. Give them their share of PAP. Remember, the parent had 80%. These guys are going to get 20%. Is there somebody who is able to remember the PAP figure? The PAP figure ilikuwa inakuja ngapi? Oye, kutoka kwa net assets, ukisubtract, wamepotea sasa. Ilikuwa kuja 2,400, eh? 2,400. Thank you so much. So 20% times 2,400 gives me what figure? It gives us 480, right? And then again, remember, you must give them their share of impairment loss. Share of impairment loss in subsidiary. How much was the impairment loss in the it was 150. And we are giving these crazy ninjas their share, 20%. So share of impairment loss in subsidiary. Are they able to remember the impairment loss in the subsidiary was 150? Are they able to remember this figure? 30. Oh, yeah. So in this case here, this will be the NCI at reporting. How much do we have here as NCI at reporting? So it will be this plus this minus this figure. So NCI at reporting, it will be 6150, isn't it? So we have here 6150, like that. Thank you very much. So we have here 6150. Hii wachana itakuwa balancing figure. Wachana na itakuwa balancing figure. 6150. So from there you go to the liabilities. You are accountants just like myself. When we are accounting for liabilities, always start with non-current liabilities. Leave some space here. Come and account for non-current liabilities. Are you able to see them over here, the non-current liabilities? Non-current liabilities. I've lost about 30 students. So non-current are these long-term borrowings. 18,000 plus 8,500. So 18,000 plus 8,500. Yeah, inanga adjustment. No adjustment at all. So 18,000 So we have here borrowings, 18,000 plus 8,500, which will end up giving us what figure, ladies and gentlemen? Please help me out. Please help me out. What do we have there, my good students? What do we have there, you my good students? Yeah, 26,500. So we have here 26,500. Thank you very much. So that is it. And then you go to the current liabilities. You finish with current liabilities. So current liabilities, you have to be very careful with the payables. Let me see what we are starting with. Yeah, so we have trade payables, you're right. So trade payables, you have to be very, very careful. So we have the payables. So the payables, ladies and gentlemen, what do we have here? Payables, 16,300 plus 9,500. What are we supposed to do? Remember, ladies and gentlemen, when, for example, I gave my wife 100,000. When I gave my wife 100,000, so for me, I know it's a fake receivable. I have deducted it from my expected future earnings. I know I will never ever receive that money. Even my wife, wherever she is, even if she just told me that she will pay this money back, for sure she knows that it's a fake payable. She knows she will never pay. She's bright. She knows that. She knows that. So in this case here, we must come and deduct what here? The 4,500, yes. I gave 3K last month. I hope you got it back. So are you able to give me these figures, ladies and gentlemen? For the payables, are we able to get this figure, ladies and gentlemen? Why they're not giving me these figures? 21,300, isn't it? 21,300. After these payables, we have in this case here current tax. We have the current tax. So current tax, we simply add the figures given there. So current tax, I can see 8,500 plus 4,900, isn't it? Here tainanga adjustment, free mark, 8,500 plus 4,900, which gives me 13 what here? 13,400. Then the other one that we will never remember, most of them, is the deferred consideration. The deferred consideration, the one you discounted. The deferred consideration, the one you discounted, ilikuwa inakuja pesa ngapi after ku discount? Ilikuwa inakuja pesa ngapi after ku discount? Deferred consideration, 121, no. After discounting, it was coming 10,000, isn't it? Yeah, so this is a liability. But remember also, there is, it's a loan you've been given. It's a loan you have been given, you'll be told to pay back, and you have not paid back interest. So the interest they are on, the cost of capital ilikuwa ni 10% times the loan amount, and we stayed with this subsidiary for 12/12 this year. Ingesema times 9/12. So then are you able to give me, ladies and gentlemen, the total deferred consideration as a liability now? 11,000. 11,000. 11,000. So then do me a favor, remember all these must add up to 148,000, must add up to our total assets. So come and say 148,000, you subtract this, subtract this, subtract this, subtract this, subtract this, subtract this to give us the retained earnings balance. Retained earnings balance. What are we going to get as our retained earnings balance? Hey, you, my good students. Hey, you, my good students. What are we going to get as our retained earnings balance? Is there somebody who is able to get this? Because our total assets that must balance with our equity and liabilities were coming to 148,000, isn't it? We're coming to 148,000. So come and take away what we know. So in this case here, the balancing figure I'm being told is 14,650. Is 14,650. Is there somebody who's getting this 14,650? 14,650. And if you look at the answer provided, my good students, before you run away and leave me alone here, if you look at the answer provided, my good students, if you're here, you'll be able to bear witness with me that, you can see our total equity and liabilities 148, and you can see our retained earnings are 14,650. Retained earnings is one of those accounts which are really, really hard to derive. That's why we like it being what year balanced. But just in case, it has never happened, but just in case you get an examiner Who wants you to come and calculate the group retained earnings? Is my time over? I have 3 more minutes. I have 3 more minutes. I have 3 more minutes. Are you going to allow me to take those 3 minutes, or do we finish the class now? Are you allowing me to take those 3 minutes? 3 minutes only? Yeah, thank you so much. So what if in this case here, this examiner insists that we do the group retained earnings? No problem. But this one I can tell you it's challenging. So group retained earnings. So we have here parents retained earnings. So parents retained earnings, what do we have here, ladies and gentlemen? Parents retained earnings from the statement of financial position given. Statement of financial position given. Parents retained earnings. How much do we have? Oh, yeah. Yeah, you can see the parents pool retained earnings here, 13,200. Thank you so much. Then come and add the share of PAP. You can use this approach. There are 2 approaches. Add the share of PAP. Add the share of post-acquisition profits that we got. Are you able to remember the post-acquisition profit that we got? And remember, ours is 80%. Ours is 80%. Oh, yeah, they are forgotten and I can see I'll be left alone. They are forgotten and I can see I will be left alone. Retained earnings, 6150. No, retained earnings is supposed to be 1920. They're saying it's 1920, eh? So after they have a portion there, so it's supposed to be 80% of 2400, isn't it? Which gives me 1920. Now from there, what else do we do, ladies and gentlemen? We know that we have other interests. We have 𝐸𝐿T. So 𝐸𝐿T, of course, we own 50%, right? 𝐸𝐿T, we own 50% of 𝐸𝐿T of the improved retained earnings. And we have done this somewhere. Yeah, so it was 3,800, if I remember very well, minus 2,500 retained earnings at the end and retained earnings at acquisition. So can somebody give me the share of 𝐸𝐿T's PAP? 𝐸𝐿T's PAP. 𝐸𝐿T's PAP. So I'm being given 600 what here? 650. Thank you so much. 650. 650. Now, ladies and gentlemen, remember we have other issues. For example, we have impairment loss. Impairment loss. Impairment loss of the goodwill. The goodwill was 150 and the parent is taking home 80%. The parent is taking home 80%. The parent is taking home 80%. Can somebody give me this figure? I can see I'm only, actually my time is up. My time is up. So 120, this impairment loss is reducing this. And then don't forget interest on deferred consideration. Interest on deferred consideration, it is us, the parent, who are given that loan in full. It is this 10%, 10% of 10,000, which is 1,000. So if you subtract like that, then you'll be able to get group's retained earnings at reporting. Group's retained earnings at reporting, which will be able to give us that same figure, isn't it? Which will be able to give us this same figure of 14,650. 14,650. Yeah. So, ladies and gentlemen, that is it. That is it. That is it. I hope you have enjoyed the session, and I hope you have learned so many things in this. I mean, the thing is, group consolidation is not a hard thing. It's only that most students normally block their mind whenever they see it's group consolidation. You can get so many marks. You can see even how the examiner, you can even see how the examiner is giving the, actually this examiner this semester, we were a bit rough because I'll tell you why. Let me show you how this examiner is marking. Very, very important for you to understand this. Now, you can see we never mark any totals. No totals are marked. And when they don't ask for, like now, goodwill workings, when they don't ask for them, no marks will be ever given to like what you've done here is useless. What you've done here for group retained earnings is useless. No marks will be awarded. Marks are normally awarded for the finals. You can see like now these are how many? 1, 2, 3, 4, 5, 6. Totals you don't give any mark. Don't even dare to add in an exam. Don't even dare to add, because I don't want your questions to balance in an exam. Because if they balance, they'll have consumed a lot of your time. You'll fail. So don't put the total. So you count here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have here 11, 12, 13, 14. And out of these 14, they are giving you any 12 at 1. Actually, this examiner was a bit unfair. In most cases, we simply say like any 6 at 2, any 6 at 2. Here you can see, I mean, you would have gotten so many marks in terms of consolidation that really you don't have, like now current tax, you are simply adding. Yeah. Especially if you are able to know like this intrabalance owings, you're able to get the figure for payables, the figure for receivables. Very, very easy. Very, very easy. Easy peasy. Easy peasy. Great. So, ladies and gentlemen, I've learned something great. Great. Thank you so much. Yes, I'll be able to upload it. I'm beginning to like consolidation. Yes, great. You'll overcome. Yeah, great. I like group consolidation. We shall overcome. Yeah, we shall upload this. We shall upload this immediately after this. Yeah, great. We have learned something. We have learned something. So RCM is the deal. So for those of you who want to join these great classes of ours, we are charging these low-hanging fruits. We are charging 1500. Na pia kuna wanafunzi ambao wanafunzi wengine wa RCM si wazuri sana. Sijui na aliwapatia wengine ndimu, wakameza ndimu. Wanapenda kucomplain sana. Hakuna mwanafunzi mwenye kwa paid group, mwenye alishalipa fees kitambo, wewe ulipishwi. Wewe kazi yako ni kutafutia wanafunzi kule nje. Walipe 1500 ya low hanging fruits, and then that will be it. That will be it. Otherwise, wote attend lessons zote. Ulikuwa hata sio for free, ulikuwa ushalipa fees. I mean, you guys have done us a big favor. We can't charge you again. We can't charge you again. But najua kuna wanafunzi ambao kama saizi, unajua saizi pressure. The pressure is too much. So anything small, inamkwaruza sana. Anataka complain. But we are very good students. We shall overcome. So if you want to join us, this is our number. Please give us a call today. Give us a call today. Otherwise, thank you very much. Be blessed. Let's compare notes later.